Good morning, everyone. Happy St. Patrick's Day. Welcome back. This is Creative Birth Strategy Podcast live on Clubhouse and live on YouTube Live, Facebook Live, Spotify, Apple, Amazon, LinkedIn, X. We're out there providing insight and strategies and opportunities and really walking through and getting familiarized with the real estate industry in every different ways. We come up with different subjects every Saturday and Sunday, providing strategy, providing just education. We're big on the education space, and we're staying very consistent. We're the only club here on Clubhouse that's providing not just insight here, insight on a podcast. We're having live events throughout the country, West Coast, East Coast, Midwest, and we're now offering educational tools for investors to tie into, as well as we're now offering a CE course for licensed real estate agents to get familiarized with the real estate industry. So I'm pretty excited about this morning. So we'll get today's discussion is yet another one is really talking about the challenges that real estate investors have and how to deal with them. First, I'll do a quick invite for anybody that's in the room or in Clubhouse. So we'll do a quick see how fast my thumbs go. And what I really appreciate about this room is it's a no sell zone where we're just providing personal opinions. We all obviously have a service. We all provide some part to the real estate industry, whether from an investor perspective or a service provider, and we kind of limit that chatter. Obviously, our profile should justify who we are and what we do, and that should be more than enough to kind of give people insight. If they're that interested in talking with you or just having an off Clubhouse discussion, they'll reach out to you, of course. I always want to thank our sponsors, which we wouldn't be here without them. First, I'd like to thank Perkatech, Yardell Perkins, who's on here with me. He's our social media strategist, and as I call him, the Oz behind the drape. We're just wrapping up my new website, which I'll be rolling out next week. Pretty excited about that. Some revisions need to be made, but we're going to get it out there. But he's been a colleague of mine, a business associate of mine, a friend of mine for over a decade now. We met actually through an event that I coordinated years ago, a Friday breakfast, and we just stayed in touch with one another. Also, I would like to thank Realty 411, our national publication that provides educational events throughout the country, West Coast, East Coast, and Midwest, Linda Pelagas. I'd like to thank MB Capital, which is our unsecured business line of credit referral partner that I work with in providing unsecured business lines of credit for investors or business to business. And then Lenmar Capital, I'm a senior loan advisor at Lenmar Capital, providing asset-based lending options to the real estate investor, real estate entrepreneur, or real estate professional. So let's talk about today's discussion. What is your biggest challenge in real estate investing today? Now, I've put some information together and some thoughts. Real estate can be a very fluid industry that adapts with and evolves quickly. However, there will always be a handful of problems in such a dynamic sector that investors have to navigate. The challenges that investors face in the real estate market can impact their business significantly. With uncertainty in other sectors of the economy during with these challenges, I've put together, some handful of discussionary thoughts. What are the most impactful hurdles for real estate investors need to jump, right? So we're going to talk about the challenges, what investors typically face, and how to deal with them in the coming year, of course. Number one, and I'll go through 8 of them first, and then we'll open it up to discussion, of course. Market volatility. One challenge to investors is the current market is volatile. There are tremendous opportunities, but the uncertainty of the global pandemic and geopolitical politics makes this a very difficult period for investors. How this can be addressed depends on the investor's strategy, whether it's long-term investors may want to avoid jumping into some hot areas or sticking instead to stable investments that can weather the storm. Increased liability. Liability is increasing quickly for investors operating their own rental portfolio. It appears almost daily that there is a new regulation being mandated to operators or property managers. Investors would be wise to work out a deal with a professional property manager to limit their liabilities that government intervention is swiftly creating. Limited inventory. A major challenge will be a limited inventory. The number of active home listings in November alone was down 50%. Okay, which makes a very competitive market. It is hard for investors to find properties where the numbers work. It is even more vital right now for an investor to be working with a real estate broker who will provide them all the market listings or the opportunities or off-market opportunities for that matter. Income uncertainty. The one challenge that investors face is income uncertainty. Everything should be considered new. The economic position of many companies will not be as before. You must investigate your tenant with care since they are the value you seek. Checking tenants out fully, make sure you are getting solid income streams. Understanding debt service coverage ratio compression, especially in that 1 through 4 space and 5 through 25 investment space. Combined with the uncertainty of COVID-19 and operating income for assets, it's making investors very squirmish. As an investor, this is time to review your fundamentals and understand the opportunity cost of investing in deals that don't make sense for you. Understand who, what, and where your investing is. Ensure the operator has stress test that business plan. I really emphasize really working your DSCR worksheets. Deal underwriting. Deal underwriting has significantly changed forward-looking assumptions regarding bad debt, delinquencies, concessions, vacancy, rent growth. All impact returns and yields. It's challenging to predict how the property will perform over the next 12 to 18 months. But in this case, worst-case scenario underwriting is advisable. For example, 0% rent growth during the first 6 to 12 months of ownership might be suggestive. Low rental occupancy rates. In tourism markets, investors are challenged by short-term prospects in rental terms and occupancy until the pandemic is under control. To address this, educating long-term prospects. I'm not a fan of STR and MTRs. I always like the long-term play. I really be very cautious of the experience of short-term rental because I think the industry standards are going to really crash down. The hospitality associations are going to really crash down on a lot of these short-term rental opportunities. I think to me the turtle always beat the hare. Number 8, evictions of delinquent tenants. Current landlords with limited capital are facing the challenge of evicting delinquent tenants and deciding to forego or accept government stipends with many strings attached. Furthermore, investors looking to acquire these same properties from tired landlords are facing navigating legal and affordable solutions regarding evictions and possible eviction moratorium extensions. The cash your keys is really big right now. Also, trying to get these tenants out to then turn these properties over. These are professional tenants, man. They know what they're doing. To me, I see more landlords leaning toward the Section 8 space because the guaranteed rent, and these tenants know if they screw around, they're getting thrown out and they're losing their voucher. Good morning, Joseph. Welcome. Brief overview, who you are, what you do, and thoughts to what is your biggest challenge in real estate investing?
Good morning, Joe. Great topic as always, right? You come up with some really good topics to help educate everybody in the audience who either listens live or listens to the replay later on. I'm a buy and hold investor in process to close on my 7th rental, hopefully next month. I also invest in tax liens and do a little bit of private lending here and there. The challenges, in each stage of the real estate investing, that there's the biggest challenge, right? One is the analysis paralysis, right? And then when you find the property, making sure that you're underwriting it correctly, going into contract and managing the contract throughout the process, but then holding it, right? If you're in a buy and hold, if you fix and flip, that has its own unique set of challenges. But since I'm in the buy and hold arena, that's what I'll speak to, right? And the biggest challenge goes into you managing people, right? Providing that housing that should be at the level that it's at, getting the maintenance done. Handymen come and go, right? And it's very rare for you to get someone who is reliable, that you can get on a moment's notice or what have you. So maintaining those relationships and those connects is definitely sometimes a challenge that you have to muddle through, right? the bookkeeping and the paperwork is definitely a challenge.
Yeah.
That's no fun to do. And I know Melissa was on here yesterday. I don't know if she's on here today. She helps people out with that. But yeah, there's a lot of different challenges that come along that are unique. They're easy to they can be easy to overcome if you stay on top of your game. But there's various limits, but don't let them hold you back.
Joe, we see a lot of challenges with the newer investor. What do you think the biggest hurdle is for the newer investor compared to the more experienced investor? Because there's some relevancies, okay? I think personally it's about the maintenance, like what you brought up, general construction, and understanding that you should. I mean, I know you self manage, but you've done it from the get go. Do you really think putting a property management in place from the get go is smart and limiting your liability?
Well, I mean, sometimes a property manager doesn't necessarily limit your liability, right? I started off with a property manager in 2018 that was paid for by my employer. So in essence, they were free to me, even though they were getting paid. Um, and even at free, they weren't worthwhile, and I fired them. And that's what made me make my decision um, to to self manage the whole way through. In addition to the numbers, right? I always go towards the numbers where I'm giving up 10% of my rental income, and that's about 10 grand a year, which is better off in my pocket than someone else's, and it pays for the maintenance for the year, and it helps my portfolio grow. But I mean, with the newer investors, I mean, I really want to tell you what their challenge is I find the newer generation doesn't have grit. They look at these Instagram folks, they see them with their Ferraris, they think life is easy, and they think I'm going to invest in real estate, and boom, I'm a millionaire. And that really isn't the case, right? Investing in real estate, you kind of get rich slowly, which is the right way to do it. But I think that's where their shortfall is. I mean, you want to also talk about the younger generation, and the stats are out there, right? They're not going into the trades. So I think the challenge not only just the younger generation of investors, but us as a whole. A couple of years in, as the older plumbers and electricians and carpenters, move out of the workforce. I mean, there's no one really to take their place.
Yeah.
So I also see that that's a challenge that's forthcoming with us.
You know what? One thing I do notice, Joe, and we'll go move on to this in a few minutes, but I see that investors are sloppy with presenting a deal. They think they could just like draw a simple stick figure up on a wall, and somebody else is supposed to be able to figure it out. And they're sad when the numbers don't match up with what they're trying to accomplish because they don't know how to present themselves or present a deal, or they're being taught by really bad instructors. I don't know who they're being taught by. Like I'm working on a deal right now for a client. It's a multifamily property in the Midwest. He is so sloppy. He's just sloppy with his information. Um, and I don't even think he has the experience level to take on this project. So like I kind of had to like outline in a professional manner and say, listen, one, you don't have presence in this market. Two, these numbers are all over the map. There's certain spreadsheets that you use to present to somebody, and none of this looks like any of them. So it makes me nervous that there's a lot of these educational events out there that are leading people down a lot of wrong roads. And at the end of the day, it's all about lending. Like you need a mortgage for most of these deals. I mean, not everybody has a couple million sitting in their bank to figure things out. So you obviously need debt. Okay. And securing funding is such a moving, fast paced, environment. I mean, like you and I talk about all this all the time. I mean, like, the local banks don't have a strong appetite. They go through a lot of rigmarole. They're getting their asses handed to them. Okay, they're really just looking for deposits. Let's be honest. So, what is going on where a lot of these people are being given incorrect information to underwrite their deals? Like, where's the miss? And then we'll go on to Justin.
You know, I don't know, right? And you bring up a valid point, right? I mean, listen, as you mentioned, right? They come across sloppy and everything, and I used to be sloppy in all my paperwork. Listen, the paperwork is the least fun, but the most important, right? Whether you're applying for a loan or you're going to your accountant at the end of the year, I mean, you need to be able to articulate what it is that you've done, and where everything's at, especially when it comes to tax time and Uncle Sam and potential audits. Are you uploading those receipts? I mean, I would tell you that the paperwork definitely is a challenge to keeping that in order.
Yeah.
And again, it most certainly is the least fun. It'll definitely make you need a set of glasses after time of doing the numbers if you're doing it right and looking at spreadsheets and collecting it.
So let's keep moving on some of the moving parts to what is the biggest challenge in real estate investing. And thank you, Joe. By the way, we're at our 23rd episode on the Creative Birth Strategy podcast, by the way. So we're moving and shaking. We've done a couple interviews here and there for some specific real estate professionals, but we're really sticking to, excuse me, podcasting the podcast. So we talked about funding. You need to know how to pencil your deal down. Like I had a call with somebody this past week. He gave me what the after repair value is. He gave me what he's buying it for, and he gave me what the repair costs are. I said, "You're paying 80,000 over what you're supposed to be buying it at." What do you mean? Well, it's real simple mathematics. If you don't know, it's 70% of the after repair value less the repairs, and you're 80,000 over that. You're overpaying for this project, and if something goes wrong, you make no money, and I have to take this property back and foreclose on you. How's that sound? He goes, "Oh, that doesn't sound good." I said, "I would go back and repencil your deals down because this is incorrect." Building an online presence also is very important to look and appear to be knowledgeable and to surround yourself with the right knowledgeable real estate professionals. I mean, as Joe and I know, there's a lot of Facebook legends in their own mind. There's plenty of them. You can find them all. They're all eating each other to death like cannibals. um, I'm not really part of all that stuff. I just post education and information and hopefully insight every day. But I do get a kick out of some of these people putting stuff up, and like they stretch their faces out to the point where they don't even look like a real person. I don't know how they do that. I wish I could learn how to do that, Joe. Um, but I find that pretty interesting. So my pictures are who I am. There is no Photoshop to this ugly picture of me. I promise you. And understanding what your assets are, understanding what type of reserves you need, and understanding the participation of what money you need to put into a deal. You got to understand the gap between bid and ask, right? A major challenge between bid and ask. Generally speaking, commercial real estate buyers want 30% discount, where commercial real estate sellers are prepared to offer a 5% discount. So while property type and location sway discounts, a price decrease is generally more in support of the seller's position than the buyer's. Directing capital into different types of infrastructures. There's a lot of creative opportunities out there, but the lending has not caught up with it. I see like barndominiums, I see mobile homes, I see modular homes. A lot of the asset-based lenders just haven't caught up with them. Okay, it's just something we don't have an appetite for. So you got to be very careful expecting to get financing for something that could produce a lot of income, but it might be a local bank or local credit union challenge for you to identify that investor to do that loan. Good morning, Justin. Welcome. Brief overview: who you are, what you do, and thoughts to our discussion this morning. What is your biggest challenge in real estate investing?
Yeah, good morning, everybody. I'm in the Southern Louisiana market. Real estate professional in some capacities. I'm a licensed broker, done several figures with. I was licensed in 2011. My journey really hasn't so much been about the agent portion, but it's been about the investor and now developer. Just really swinging into that right now. Just as far as the way some of the things that somebody in my position does, right, to maneuver, because everybody's going to have their own specific set of challenges that you're going to have to get over, whether that's something mental, financial, or what have you. So right now, I'm literally in front of my computer, and for a while, I've kind of generally known the basics of putting some plans together, but recently I've learned, the more higher level stuff that I'll need to be able to design plans that actually look like an architect did them. Of course, I will not be able to put the official stamp on these plans, but in a situation that I'm in right now, where I have about opportunity for a new build. They may be different size. I don't have $3 grand to go spend a piece to get a full set of plans for each one of these builds, and then just so I can go get quotes to see how far I can go and do all of that stuff. So this is a skill that I'm using to help me cross my T's, dot my I's. Of course, NAR is helping us out a little bit with this commission stuff, so they'll be cutting stuff. So basically, I guess what I'm getting at, Joe, is there are a number of ways for you to control some of the hard to control in your projects, in your deals, and anytime you have an opportunity to do so, be smart, know yourself, right? I'm not just saying go get licensed and everything there is to do to get a deal done. No, but if you know that you have a skill set that might help you and help your numbers in a time like this, it would really be smart for you to do that. I know a lot of GCs that do that. I'll probably any opportunity I get, right? I'm not gonna put myself in a bad position where I wouldn't be the best general contractor for a job or project. You always want to be the best person in, not yourself, but there are ways to kind of trim the fat and put some extra safety barriers in there, and just still want to be cautious with it. But these some of my challenges have been not necessarily making the numbers work.
Yeah,
Pretty decent deals, but my challenge, I would say, just to wrap up, mainly would be just making sure that I have all the tools in my toolbox and everybody on my team that knows what they're doing. So sometimes you have to step in and make some adjustments. So just be ready to maneuver.
yeah, I agree with you. I mean, listen, real estate investing as a business, you need to know some of the challenges before you start. You need to understand capital requirements. You need to understand financing process. You need to understand market fluctuations, property management, exit, right? What's the exit strategy? Whether it's the entrance is the exit strategy, like if it's a long-term hold. This is a time-consuming process. Before you start, consider how much time you will give to your real estate business, right? Keeping in mind that you have to do lots of research and visit a lot of properties and make a lot of assessments. And hiring the right power team that includes a real estate agent, the right lender, the right home inspector, the right GC, the right maintenance individual, the right property management. These are all very important pieces for continuous communication and to seek blessings by this power team. And you got to go with your gut too. Capital requirements for investment. You got to understand what you need in reserves and what you need to escrow. And the software that I provide, the worksheets I provide, walk you through in what you need to see available for yourself, whether you're pricing the deal out, whether you're looking from a debt service coverage ratio perspective, whether you're looking for a cash flow perspective. Understanding the financing process is so important. Okay, and understanding market fluctuations you cannot control. Obviously, right now, your urban settings, your suburban settings, and your rural settings are definitely three different markets. They're very far for you in between. There's a lot of things going on, whether it's market rent or Section 8, tenant responsibility, liability, landlord responsibility, landlord or tenant favorability. Know how to challenge to obtain the knowledge to understand one, the eviction process, but two, and understand how to maintain a good relationship, whether through directly to the tenant or through a property management company to that tenant. And understanding, if you have to sell the property, where you want to sit yourself, right? Right. You got to understand what the exit strategy. If you're going to be a flipper, you got to know how to buy better. You make money when you buy, right? So the equity is everything on the back end, and the timing is also just as important. Property management and the whole strategy. I'd interview 3 or 4 property managers before I get in bed with one of them and go long term with them. Understand what they're managing. Understand if they have properties of their own that they're going through the same rigmarole as you. Okay, do they understand your market? Do they understand the eviction proceedings? Do they understand Section 8 versus market rent? Do they have a good attorney on team to address the needs for you the minute that tenant decides not to pay? Are they good with maintenance calls? Are they good with communication with their tenants? Your tenants for you. These are very important factors you need to keep in mind, and these are all challenges in being a real estate investor. Linda, good morning and welcome. Brief overview: who you are, what you do, and thoughts to our discussion. What is your biggest challenge in real estate investing? And let's get an update on Realty Forum 1 Investor Summit in Philadelphia.
Good morning, everyone. Hello, investors. My name is Linda Pliagas, and I'm the founder of Realty411.com. We're a news and information website for real estate investors. And we also produce magazines, virtual and live events, podcasts, all in an effort to help investors in their journey toward prosperity. Now, I've been a real estate agent also for over 17 years in the state of California. And as a landlord for over 20 years, I would have to say the biggest challenge has always been minimizing expenses while maximizing profits. Now, for example, mitigating those large unexpected expenses has been very difficult. The broken pipes, the air conditioners going out, vandalism that is done to the property, such as holes in the wall, broken cabinetry, broken windows, fences going down because of storms. All these are just unexpected expenses that virtually came out of nowhere for me. And they always also seem to happen at the worst time when you're least prepared for them. Now, some of the ways to mitigate the risks that I've gone through, which these are all examples of expenses that I've gone through on my properties that are unexpected, came out of nowhere. And some of the ways that I have learned to mitigate those risks now because of experience of having to go through them is number one, always have reserves in your bank account. I cannot stress this enough, folks. It's so important as a landlord to have a cushion in your account. And also, the more properties you own, the more properties you have in your portfolio, the more money you're going to need in your bank account for unexpected expenses that, trust me, they will happen. It's not a matter of if they're going to happen, it's when they're going to happen, because that's how properties are. Maintenance, they slowly fall apart. Things have to be maintained on a regular basis. Mm-hmm. So number two, it goes back to addressing the problems right away, because small issues can create even larger problems down the line. So addressing the leaks that could turn into broken pipes down the line, addressing water heater, leaks in the water heater, that before the water heater blows up and floods all over the place and goes down to the unit below. All these are really important things to address. Also, it's important to be insured correctly. Be insured for flooding issues. Be insured for vandalism and other problems that may come up. In California, you may want to get earthquake insurance. You may want to have your buildings retrofitted to make sure that they can withstand an earthquake. it's important to be insured with a reputable company. I would never insure my properties with a rinky-dink little, insurance company that I've never heard of. That's asking for problems. I always insure our properties with the most well-known insurance company that I can find. I personally have used Farmers Insurance for many years. Now they're not writing in California anymore, so I had to go with another insurance company that I found that has been in business for decades. Um, you want to find insurance companies that are reputable and also will pay your claim. That's very, very important. Um, I've known of companies in the real estate space that never paid claims, and there's a lot of um, negative reports on these companies online that you can find. So I definitely recommend doing research on insurance companies before you get into a policy with them, to make sure that they will pay your claims. Now, I hope these suggestions will help others. Other ways of maximizing your cash flow is by raising rents, and you have to do it on an annual basis or at least every other year. It's not pleasant to do as a landlord, and yes, you will get complaints from your tenants, but this is a reality. Expenses go up every single year. I've never heard of property taxes going down. They go up every year, and so do insurance premiums. Our property taxes, our insurance premiums, and our utility costs go up every single year. You have to pass on those costs appropriately. And also, as a landlord for over 20 years, another thing that you can do to really make a big impact on your portfolio is to pay down on your real estate mortgages every year or every other year. Pay down $10,000, or pay down $20,000 on that note if you can. Make an extra mortgage payment every single year. Just one extra monthly mortgage payment every single year. Doing that for 10 to 15 years, you're going to see a huge difference on that mortgage payment, and you're going to just maximize your cash flow. So these are all the things that I have personally done in my real estate portfolio over the past 20 years. These are tips that I tell my daughter as well, so she can be prepared to take over our portfolio in the next 20 to 30 years, or whenever it's time for her to take over. And I really hope that these have helped. Want to invite everybody to our East Coast real estate event with Joseph Scarice in Philadelphia on April the 13th. He posted the link right here on Clubhouse. It's going to be an amazing event. We had over 120 people at our last event in Philadelphia, and we're really excited to meet everybody in person. So we hope to see you there. It's going to be a fantastic event, and this is your opportunity to meet Joseph in person. I'll be there in person, and you're going to meet us and learn directly from us in person, which is truly amazing. You're going to go away with a lot of energies to help you become the real estate investor that you were meant to be. Back to you, Joseph.
Thanks, Linda. Yeah, I'm really excited about the second annual event. I'm sorry, I'm still battling a cold. I apologize. I'm drinking a lot of liquids. Um, I'm very excited about this because I stopped getting involved with events post stroke. I'm a stroke survivor of now almost 5 years, and I decided just to kind of network and not run events, but I'm slowly getting back into events. This is one of them coming up. We have a cigar event the same month, which we're having in South Jersey. We're also having a happy hour this Monday night at Moonshine Philly, which is pretty cool. A client appreciation happy hour. You know, I'm trying to be very consistent in really good ways of networking with people, and I think Clubhouse has been a great asset for me, motivating me to restart my podcast with Yardell Perkins of Perkatech, and staying in touch with associates such as Linda, and having these national events throughout the country and being part of that from a speaking perspective, because I don't sell anything. I just provide insight and education and strategy. So, one thing I did take from what Linda was talking about is insurance. You need to sit down with your insurance agent and really know, if you're going to grow out your portfolio, what that impact is going to look like. And do not underinsure your properties at all. Understanding also local laws and regulations and staying updated on any of these changes is so important. I keep talking about building this reliable team, and I can't emphasize it enough. Your power team is your progress to success. Okay? We're not here buying bicycles and puppies. We're buying a physical home that you're going to make money from. You're going to secure debt on that property. You need to understand that debt and how that's going to make you a lot of money over time. Okay? Appreciation, depreciation, and cash on cash return. Good morning, Anna. Thank you for your patience. Brief overview: who you are, what you do, and thoughts to our discussion. What is your biggest challenge in real estate investing?
Good morning. I'm Anna Abernmarco. I'm a realtor, investor, and mentor here in the lovely Chester County, Pennsylvania. I would say my biggest struggle is making my phone stop ringing this morning. And it just keeps happening. But anyhow, I guess when I think about so sorry, how this will all look like for my young adult kids. When Joseph was talking earlier with regards to the trades and just young adults not having a clue and whatever, I completely agree. But I was one of those parents who didn't force higher education and white collar work on my kids. One went that route, the other did not. And I'm happy to say he's a journeyman in the construction union in New York, and he does great, and he knows things, and God bless him. Somebody at least can fix shit around our house. But anyhow, yeah, I would say I have a hard time envisioning how this will all play out. Whatever my husband and I have started, me getting into real estate and owning properties and figuring out next level, and how will it leave them.
So, Anna, what are some of the challenges right now, right in front of us, with this NAR settlement? How is that going to impact you with communication? I feel the better communicator is going to still do just fine. I think the people that can't communicate are going to have a struggle because they actually have to talk to their client about what's going on. So, what's your thoughts on that?
So what's it been now? 48 hours?
Yeah.
72 hours?
Yeah.
And I'm already so sick and tired of hearing about it. But, I'm a realtor, so of course you went there. But yeah, your response or your feeling and reaction, it's not changing a damn thing.
I don't think so.
In the way I operate.
Yeah.
Right. Now you have only 18 states in the country that it was already mandatory to even have buyer agency contracts. Yet even in those states, they were pretty much doing them. When a buyer found a house. So you got that scenario. I think those of us like myself who have been in that mindset and process from day one, it's like, okay, what's the big deal? What's the change? No change here. Either, my buyers understand that they're responsible to pay me. I think as a realtor, if you've never been paid directly by your buyer, well, you just haven't, I don't know, done it long enough or had an experience, whatever. But it's really not changing anything that I do. I am heavy on the listing side, though, not going to lie. I think my experience in off market, 30% of my business is off market, has also prepared me for this. I can't tell you how many homes I've sold where there was no buyer agency. I'm sorry, cooperation agreement with to cooperate with a buyer agent. Not to say that a buyer agent didn't represent the buyer and that they didn't get paid. They had to negotiate it. Like, do your job. Like, I honestly, I couldn't care less if compensation was being provided or not. I'm going to work the deal. That's my job. My job is not to open a door and say, here's the kitchen. Look at the granite. Isn't it pretty? Like, that's the boring shit. My job is to protect my client's best interest and to negotiate on their behalf. So if we can't even negotiate our own compensation, we really shouldn't be selling real estate anyway.
Well, I think, we also being St. Patrick's Day, this is the year 4 anniversary of COVID-19 and the shutdown. So I think what happened here is the younger professional was cut off in really good communication skills. And I think, I hate to say us old folk, anybody above 45, you know, I think we're going to do just fine. I think this is our decade. I think this is a time where we are accustomed to multiple changes in economics, and this is not a challenge. I don't see this economy or this current market as a challenge. I'm very passionate about what I see in front of me. I'm having more detailed conversations and really very open discussions about the real estate growth of a client now more than ever before. Like, I'm not spending just 5 minutes on the phone. I have about 10 calls to make today alone with clients that are very inclined to understanding what their best strategy is. Okay. Whether I'm finding them through inbound lead generation, referral introductions. Once we have that conversation, they know I'm being very specific in my intentions and what needs to be addressed and accomplished to close the loan. Okay. And I think on my side as a service provider, or anybody being a service provider, your communication skills have to go up a notch or a couple more notches. You need to be transparent. You need to be professional. Okay. I think there's a huge opportunity with these, what we call challenges, because I see opportunities all the time. So when somebody tells me they can't find a deal, I know they're not working hard enough, or they're not surrounding themselves with the right people, or they're just not underwriting a deal correctly. And that's just, listen, that's a personal opinion, okay? And you know what opinions are like. Everybody has one, and that's why we have this room. We give our opinion. We're not your attorney. We're not your CPA. Don't sue us, okay? We're here to provide our insight, our personal beliefs, our educational background toward the subject at hand every Saturday and Sunday. I'm colleagues with everybody. I think I've met everybody, and you're probably the only person I've never personally met. But we're not actually that far away. But if you need that real estate attorney in New York, I could refer you mine, who's barred in New York. He's very good. So if you text me my number and just let me know that you need his number, I can send you his information. I will not disclose his information on here. Yeah, my number is right on my profile. And listen, making introductions are easy.
Give him a heads up.
Yeah, yeah.
Much.
I'll prepare him. Don't worry. I'll prepare him. I'll prepare him for Anna. That's no problem. He's a big boy. He can handle himself. He's another a fellow Italian that obviously, since we saved Ireland, nobody wants to recognize us as Italians on St. Patrick's Day, but we know that we obviously saved Ireland from all the snakes years and years ago. So it's actually our holiday along with the Irish. Joe, your thoughts to our discussion so far? Any insight, any thoughts? You're the real estate investor. You're not a licensed agent. You depend on all the other people, which you put your foot up their ass to get shit done as an investor. What's your thoughts to this? What we're talking about.
No, it's really good conversation, right? You need to stay on top of everybody and everything. You can't just give it give a job out to someone and not follow up on it. No, there's no just it's just overall real good conversation, right? A lot of different points from we're talking from insurance to maintenance to underwriting and a lot of good points that have been thrown out there. A lot of golden nuggets as usual that's out there, Joe.
I mean, Joe, your personal opinion, and again, you don't have to disclose anybody. Do you find the real estate professional that you're depending on, this power team that you depend on, are they just naturally lazy and you got to kick them in the ass half the time to get shit done? Is that usually the case as a real estate investor? Like, what's your thoughts behind that? Like, do you just scratch your head sometimes?
Well, listen, sometimes people do leave you scratching your head and trying to figure things out. But I mean, at the end of the day, hey, it's your deal, right? And people, you like to think, Joe. Case in point, right? You do loans for folks, but people need to recognize that they're not your only client, right? If they were sitting there just feeding just off of me, that's a whole different story, right? So you're not the only client, and my job is to keep on top of you to make sure that you're getting me where I need to be, right? Because you can get sidetracked. Anybody can get sidetracked, whether it's a realtor or it's an accountant, it's what have you. And if there's deadlines that are coming up, a simple follow up, hey, where are we at with this? Um, closing is this date, or April 15th is coming up. Do I have my extension letter ready? Right, you need to be just as much in the game controlling it, because at the end of the day, you speak for them, right? And you can't be relying on these other folks to just get you to the finish line.
It's interesting you bring that up. I went to an event, it's a couple weeks ago. It was called Brokers and Bankers Forum. And I'm like, okay, I'm going to meet a bunch of other fellow lenders. Okay, I don't do what a lot of these other people do. Okay, most of it was all traditional lending, credit unions, small banks. Man, did I have a great time? You know why? The gloves were off. We were just having just industry talk. Okay, I feel what has happened in our industry in the last 4 years is that there are truly different sectors of the lending space. Now, again, the same with real estate as well as a whole, from a real estate agent perspective, insurance perspective. People are defining their skills on who they are and what they do. So when I met with a credit union, there's things that I just don't do. And we had a great conversation about specific clients that I need to hand off because there's just something I can't do. But I was very open and transparent about it. And they were very transparent about what their appetite is and their footprint. And it was like we were like peanut butter and jelly, but we weren't being like, there wasn't this level of arrogance per se. Do you understand what I'm saying? It was just really good professional talk. And when you could have that type of conversation at a small networking event, and I'm a bigger fan of smaller networking events, under 200 people, it's got to be cost effective to attend. It's got to have all the right people in the room. Okay, networking, investors, realtors, lenders, title people, insurance agents. I mean, it should have a robust diversity, and most of the people should be understanding where asset-based lending is and where the investment space is and what the differences are between traditional lending and hard money and asset-based lending. So Joe, I mean, are you have you attended, I know you go to other events outside the RIA. Where do you get that best vibe where you feel like you're just kind of being yourself? I'm Joe Martello, I'm an investor. Where are you not beating your chest? Where do you feel like, is it the subgroup meetings where there's 25 to 30 people? Is it the bigger events where there's 100 people in a room? What's your thoughts? What's the
Well,
challenge?
listen, I always find it in the smaller, more intimate events, the more informal events, if you will, right?
Yeah.
Happy hours, going to a bar, grabbing a drink after the meeting, where you're just sitting there talking about whether it's real estate, family, what have you. But I mean, just making those connections. That's where the real fun comes in, right? Sitting there and standing up in front of the room and being formal. I mean, listen, at the end of the day, the real deals, even in major business, happens on the golf course, right? It's when the informal conversations happen. People have their guards down and they have a genuine conversation. They're making a genuine connections.
I appreciate that, Joe. Thank you. Justin, any final thoughts to what the biggest challenge? Like we're talking about understanding market research, diversifying your portfolio, having a contingency plan, right? Understanding hiring the right reliable team. Any thoughts to what we're discussing so far this morning?
Yeah, absolutely. I think there was one thing pointed out today, and so I think it all points back to you know double check and check once, but verify, right? And that's really with everything across the board, whether it's with your lenders, making sure you have the right lender, making sure you have the right have construction and stuff, so on and so forth, and making sure you have the right deal. And if you're relying on an agent to source your deals or a wholesaler, you absolutely need to double check to make sure it's in your criteria. So just a whole lot of fact checking, I believe.
Well, this is something I like to add. You have to leverage a couple things. One, you have to have a sales process. We're all in sales. I don't care what you think. Even Joe, he's a real estate investor. He's in sales. He's trying to sell himself in front of people. We're all salesmen and saleswomen. Okay? You need to deal with the unrealistic investor that's out there also. There's going to be people that you're going to walk into an event and they just don't like what you look like. And guess what? You're going to have to get the frig all over it. Okay? I have 15,000 friends on Facebook between 3 different profiles. Do you think everybody likes me? Or do you think people follow me from a hating perspective? I don't know, nor do I care. Okay? I just know that my inner circle, they bear with me. They don't always like me, but they love me. They respect me. And that's how life is, okay? You need to be a salesperson at all times. Not hard salesy, but just kind of and obviously leveraging your technology. If somebody makes a response to one of your posts, respond back to them. It can be short and sweet, but to the point, right? I mean, there's nothing wrong with great communication, and managing your paperwork is everything. Like yesterday, I took an hour and a half of my time to make sure all my stuff was addressed. People were calling me, people were texting me. I focused on Joe Scarice and focused on getting everything clear. Because if Joe Scarice is not set up correctly and functional, I can't help anybody else. And you're going to deal with rejection, right? You're going to deal with rejection. You're going to deal with people that just are not going to want to deal with you. And you're going to need to get past that. Okay? These are real life challenges in the real estate industry. There are people that just not going to like your face, and you're just going to have to get over it. Right? You're going to have tons of rejection. Right? You need to have an increasing presence as a social media strategist, no matter what space you're in. Excuse me. Like, I had a great podcast yesterday on infinite banking. I thought this subject was very necessary to be presented at a local RIA that we were part of. I introduced Joe. I didn't introduce anybody else. I just said, listen, let's see what Joe runs with it. I made the introduction. Let's see what happens. Do I think it's a great subject? Absolutely. Does this gentleman have mutual colleagues that Joe knows and I know? Absolutely. So he's vetted. He's been already vetted. We know who he is. We know what he does. I feel that he has an integrous presence. He doesn't really sell anything. He gives insight on a subject where people want to know about. That actually interview will be posted sometime this week. Take a look for it. It's with Jeremy Powers. Really great understanding of infinite banking, and I thought it was extremely unique. You need to understand also how to manage your back office tasks. I took a couple courses with Brian Tracy back in the day. I treat every email the same. Every one of my emails is treated and touched before the end of the day. So the next day, anything that's in my email, it's fresh. I don't avoid, I don't put in draft, I don't do anything. Like, love my wife to death, but she'll put 1,000 emails in draft and not get to them. I attack every email the same way, every phone call the same way, in order. You need to get very regimented and very savage-like in what you're doing, whatever you're doing in the real estate space. Break these challenges. It's Sunday, guys. It's a great day to relax. Beautiful day outside. But guess what? Tomorrow is Monday. How are you going to hit the ground running to create inbound traffic to you or outbound traffic for your team or yourself or your power team? What are you doing today to set up your Monday? Same with Monday to Tuesday, Tuesday to Wednesday, Thursday to Friday, Friday to Saturday, then we're back Saturday and Sundays. Okay? Do you need to take time to relax?
What I'm doing right now.
What's that?
I can tell you what I'm doing
Well,
right now.
I mean, listen.
As you're on here, right? Like I'm identifying the people I need to speak to
Yeah,
tomorrow.
of course.
And
You're setting it up.
my assistant, right? Like all your lead generating starts the day before, and
Of course.
you know, I hear you on the social media part. I don't know why though. Call it triggering, whatever. I get the value of social media and putting out content. Yet I think, at least in the real estate space, way too many realtors dancing on tables and doing the whole whatever.
Yeah, I don't get it.
You should just pick up the fucking phone and make the phone call.
Listen, Anna, listen. When somebody calls me, right? Hey, Joe, I need you to take care of this for me. No problem. I'm driving right now. I'm driving down the Pennsylvania Turnpike. Yes, I do text myself the name of the individual that called me because it's an acronym. I know when I see that email in my email box, I have to address this, and this. Okay? Send yourself emails so you don't forget, yeah, I'll get to you later. No, you get to it now and set yourself up with your future endeavors that you need to do. Break all these challenges. There's no reason why you can't accomplish every single text, every single call, every single email if you keep order to what you're doing. Right? So there's a method to our madness in our challenges in real estate. All right? It's not just about limited inventory. It's not just about market volatility. It's not about increased liability. It's not about debt service coverage ratio. Okay? It's not about any of that. It's about the mirror. Okay? That's really the competition here. If you allow yourself to be overwhelmed, I mean, listen, I had a very catastrophic event happen May 15th of 2019. A lot of shit could have happened. Okay, a couple different ways, like breathing could have stopped. But for some reason, I have been allowed to stay out here and do what I got to do and be hopefully the right person for a lot of people. And you need to think about that every time you talk to somebody, every time you tell somebody to go scratch or whatever, you're going to run into that person. This community is not that big. I think you need to have those breakthroughs to thus limit the amount of challenges in your mind. So I'm not trying to be your coach. I'm trying to be someone that obviously could be just give you some direction on what you're trying to accomplish today, and that's the biggest challenge. There's a lot of rooms in here that talk about motivation, inspiration. Guess what, man? You're the only person that can get in your own way, whether it's credit related, obviously income related, cash flow related. You can get yourself out of your own way. You can restabilize yourself. You can reinvent yourself, right? So, like, I was in the traditional lending space for 18 years. I dived into asset-based lending. I'll never go back. You know why? I found my passion, and I don't find it a challenge now. I find it as a passion. So you got to find your passion in the real estate investing space, in the real estate industry as a service provider or an investor. Linda, some final thoughts? Linda going once?
Yes, I'm here, Joseph.
Sure.
Great points today. Great information and strategies. My final thoughts is I would encourage everyone to connect in person with your local real estate group. Go network with local individuals and professionals. Pass your business cards around. Meet other investors that need your services if you're a real estate agent or broker. It's all about connecting, networking, and sharing your knowledge to attract like minded individuals who not only you can learn from, but hopefully do business with as well.
Thank you, Linda. Anna, your brief thoughts on the final outro. Anna?
Sorry, multitasking. Yeah, I don't know. I'm drawing a blank. I just think realtors should just, get out there and be more active and less passive.
Thank you, Anna. Justin, your brief outro. Justin going once. Justin.
Yeah, sorry about that.
No, it's good.
Trying to get to my phone. Yeah, great conversation this morning. Stay guarded and make sure you hit every final thing. And stay confident, too.
Thank you. Joseph, your brief outro.
Yeah, no, again, great topic today. Really good stuff. It's good to know that, you're not the only one with challenges that you're facing when you're going through the game, and that even when you're a newbie or you're an experienced person, there's still challenges that are always down that road. It's never just clear sailing. You're always going to have a new challenge that you're going to be facing with, and you need to rise to that occasion. But great topic today, Joe.
Thank you. Listen, there's stories and then there's bullet points. Try to get your stories to bullet points when you're trying to present something to somebody for them to understand. People get lost in stories. They understand bullet points, specific intentions. My quote this morning: self-discipline begins with the mastery of your thoughts. If you don't control what you think, you can't control what you do. Napoleon Hill. I want to thank our sponsors, Realty 411, Lenmark Capital, MB Capital, and Percatech. And I want to thank Yardell, as always, our social media strategist, and our SEO Oz behind the drape. We'll be back here next Saturday morning, 8 a.m., and next Sunday morning, 9:30 a.m. I hope to see all of you at Realty 411 Investor Summit in Philadelphia at the iconic Mummer Museum. We'll be also scheduling luncheons and happy hours around that event, along with a dinner. But you need to register first to find out about that. I'll be ending the room in the next 30 seconds. Thank you.
Bye, Donna.